How to survive an IRS trust audit. This is a hot topic. A lot of people don't want to speak on this. I feel like most people feel that if you don't talk about it, if you don't acknowledge it, it doesn't exist, but it does. And we're going to talk about it. There are three main things that we're going to get into in this episode, but I mean, you should stick around for the last one, because who knows, maybe you had no idea. This is the foundation where we understand incorrect information incorrectly applied can get you hurt. Correct information incorrectly applied can get you hurt. So we are always correctly applying correct information here at the foundation. I am Sot L, seeker of truth L, speaker of truth L. And we're gonna jump into the show. This is gonna be really quick. I'm not trying to keep you too long. I'm gonna reduce the time that I'm talking, to make it shorter. I don't think I need to be talking all the time, but welcome to the foundation. Welcome to thefoundation.com. Make sure you check out our website. At the very least, sign up for the email list right here in this box where it says primary email. I did want to speak on our trustee training. I would say the most comprehensive and affordable trustee training available in North America. How about that? North and South America, right? Publicly. That's the caveat. Publicly available. We have silver, we have gold, we have platinum. I do want to say all tiers include a complimentary 60-minute consultation with yours truly. I've been teaching trust administration for over 11 years. Big deal, big whoop, right? But we have the silver, we have the gold, we have the platinum. The platinum right now is, I would say, the best deal going down. You get my actual phone number, my mobile number, my real mobile number, not a Google Voice number, any one of those voice over internet protocol numbers. We're going to give it to you, as well as the email support. We have weekly calls that I've just reestablished. I was doing that years ago, doing it again now. Trustee training every Sunday at 5 p.m. Eastern. What is that? 4 p.m. Central, 3 p.m. Mountain Standard, 2 p.m. Pacific. I think I got that. But we're back. And I'll just say, platinum, you get the weekly calls. And you know what? We'll just say gold, you get the weekly calls only for the next week. That's the gold. Platinum, don't worry about it. Gold. I just made that up, right? So for the next week, you sign up for trustee training. That is until next week, which is, what day is that? Next week, Wednesday is the 10th, right? So next week, Wednesday is the 10th, but you sign up for the gold trustee training and we will get you into the weekly calls as well. So now, hopefully you're happy. Otherwise, we have the silver market. Oh, connect. No, we don't care. We ad block, baby. Silver still trading sideways since, what is this date? Thursday, May 21st. $73, about 15 cents. Gold right around $4,400, $4,450 to be more specific. And then we have the Shanghai silver price. Eastern spot market, 81.65. Western spot market, 73.14. So, a little broadening of, converging. More of a converging of the price. It was more of a gap. I would say a week ago, 2 weeks ago, or something like that. But as we always say, dollar cost average, $25, $50, $100. Every 2 weeks, every month, go get some silver. Just make it happen and get used to it. Just let it be normal. So trust audits, trust administration, IRS audit, what to expect and how to prepare, right? Overall audit rates, this is from 2023, 1040, less than 0.5%. Estate trust returns, less than 0.5% to 1%. High income trust, high income, so that's 200K or more, 2 to 4%. You're more likely to be audited if trust has income over $200,000, large charitable deductions are being taken, you have significant capital gains or losses, It has business interests. There's foreign accounts related to the trust. And it's related to an audited estate. So, it's related to another structure or another estate that has already been audited. Common audit triggers: income discrepancies. 1099 forms don't match the 1041. Missing income reports by payers and unreported capital gains. Like an example, bank reports $50,000 interest on a 1099 INT or interest. Form 1041 shows only $30,000 in interest. IRS computer catches mismatch automatically. Excessive deductions, red flags, trustee fees much higher than normal, which is around, 3% of the assets. Large administration expenses without explanation and deductions exceeding the income. Yep, that'll get you. That'll get you. Number 3, large charitable contributions. Deductions of over $5,000 require appraisal. Non-cash donations over $500,000 require additional forms, and contributions to questionable charities. You can guess what those are. Related party transactions. And this self-dealing, co-mingling. Sales to trustees or beneficiaries. Sales of trust assets, trust property, etc. Loans to related parties. It'll get you. Below market transactions. Selling a property below the actual market price. Oops. And of course, self-dealing. You have that in there. Let's do it. Number 5, estate tax return audit. If Form 706, which is the estate tax return, is audited, IRS often audits related Form 1041s, looking for consistency. Number 6, large capital gains with small basis. Suspicious. Major gains with minimal reported basis. It suggests missing stepped up basis, and the IRS wants to see date of death appraisal. Yep. Suspicions. Number 7, math errors, simple mistakes, addition, subtraction errors, wrong tax calculation, misplaced decimals, often corrected without a full audit, which is known as a correspondence audit. They just send you the letter, hey, it looks like this, and you send it back like, oh, sorry, here it is, and they're like, okay, cool. Different types of IRS audits. There's a correspondence audit. Personally, that's the one I dealt with in 2016 for the 2015 year, because that's when I implemented the trust estates and actually did it all in 1 year. Did the whole thing really quick. Audited. That was a correspondence audit. It's how it works. IRS sends a letter requesting specific documentation. That's not true. They didn't request specific documentation. I had to call the number on the letter and ask the lady exactly what line, what number on the form that they were looking into. There was no in-person meeting, absolutely not. I did respond by mail with the requested documents, which was, trust minutes, and it was resolved within 3 to 6 months. I will tell you, my situation was resolved within 2 weeks. I will say that it has to do with the mail and where I inhabit. I live real close to the Capitol and real close to where the IRS, state audit office was. An office audit. This is a medium. Oh, hold on, I slowed down. Typical requests: proof of specific deduction, explanation of income, and supporting documentation. It's simple. It's not difficult. This right here, if you are a trustee and you're in trustee training, this number 1, correspondence audit, which is 75% of audits, that's as far as it's going to go. It's not going to go to the office audit unless you were misadministering the trust. Trust me. Number 2, an office audit, medium complexity. How it works: IRS requests in-person meeting at IRS office. They review specific items. You're supposed to bring requested documents, and it's usually a 2 to 4 hour meeting. Very, very intimidating. That's what they want. A field audit, which is most comprehensive and rare for trusts. How it works: IRS agent comes to the trustee's location or attorney office, reviews the complete return and records, may take multiple meetings, can last 6 to 18 months. It's reserved for high-value estates, complex business interests, and suspected fraud. And then there's a process. You receive the notice, they send a notice, and they tell you specific items being examined. That's not necessarily true. And maybe this may be speaking with regards to a federal audit. Never dealt with that. It was only state audit because private trusts do not file state tax returns. But, well, except for very specific situations. And I'm not even going to get into that into this episode because remember, I said I want to talk less to y'all, give you more time in your life, enjoy yourself. Step 2, you gather the documents. Whether it's income, deductions, distributions, asset values, trust document itself, the trust indenture, or, specific resolutions of the Board of Trustees and prior returns. If there's a discrepancy between, a return from a year or prior, it's probably going to trigger an audit. Step 3, you respond to the IRS. Step 4, IRS review, blah, blah, blah. And you guys are like, well, the name of the show was How to Survive an IRS Trust Audit. I think that the biggest thing of survival is never having to deal with one. Let's go over here. Check this out. What is this? IRS audits demystified, what triggers them, what to expect, how to survive one. Hey, that's crazy. That's crazy. I did not read this and then name the show. But that, hey man, I like the internet. What an IRS audit actually is. An IRS audit is a review of the tax return to verify that your reported income, deductions, and credits are accurate and supported by evidence or substantiation. The agency is not assuming you cheated. It's asking you to back up the numbers you put on paper. I would say maybe there is an assumption. Audits end in one of 3 ways. 1, no change. That's what happened with me. The IRS reviews your documentation and accepts your return as filed. Roughly a third of audits land here. And I was never audited again. And I would say, I won't say, but I was never audited again. 2, there's an agreed adjustment. The IRS proposes a change, you agree, and you pay, or receive the difference. More often than not, it's going to be, and you pay. 3, disagreed adjustment. You and IRS see things differently. You can negotiate, appeal, or take the matter to U.S. tax court. 3 types of audits: correspondence audits, office audits, and field audits. We went over that. What triggers an audit? Income that doesn't match, third-party reports. So if you've contracted on behalf of the trust and you were requested on behalf of the trust and submitted a form, what is it, I-9, W-9? It's a W-9, right? Information, tax information request, payer, whatever, taxpayer request, something like that, though. I'm not trying to memorize all these forms. So you give them the EIN of the trust. Generally, it's going to be a business trust. And then they report all of the payments made to the trust. This is so the company can take a write-off on expenses because, paying you is an expense, or actually technically paying the trust is an expense, right? So they report a certain number and then they're saying, hey, we paid this trust $50,000. And you say, hey, we received $30,000. Whoops. Deductions that look out of proportion. IRS knows roughly what a person at your income level typically deducts. And of course, this looks like we're talking about individuals, but it would be same or similar for trusts. Consultant making $80,000 who claims $40,000 in meals and travel will stand out instantly. The deduction may be entirely legitimate, but the ratio invites scrutiny. Large charitable deductions. Charitable deductions get cross-referenced against averages for your income bracket. Cash donations are limited to 60% of your adjusted gross income. So they raised it. It was 50%. And this is for public charities. 60% of your AGI, public charities. And they're capped at 30% of your AGI with regards to appreciated property. That's for individuals, though. Just being clear. Repeated business losses. If your business reports a loss year after year, the IRS may decide it's not really a business at all. It's a hobby. The hobby loss rules, sometimes called the 3 out of 5 year rule, generally expect a profit in 3 of the last 5 years. Without that profit, your deductions can be disallowed entirely. And this is even if, the structure is taxed as a corporation at the federal level. Worker misclassification, treating workers who function as employees as 1099 contractors. Generally, that's not going to happen with a trust. Cash-heavy industries, restaurants, salons, car washes, laundromats, and other cash-intensive businesses face audit rates that can exceed 3 times the average. Cryptocurrency and foreign accounts, I think that's self-explanatory. Round numbers everywhere. A lot of people don't think about that, but there's always going to be some change. The numbers aren't uniform. And we're going through the audit timeline. I do want to touch on the IRS. Let's go deal with the big boys. Random selection. Why am I being selected for an audit? Selection for an audit does not always suggest there's a problem. The IRS uses several different selection methods. Random selection and computer screening. Sometimes returns are selected based solely on statistical formula or formulae if you're dealing with one. More than one. We compare your tax return against norms. For similar returns, we develop these norms from audits of statistically valid random sample of returns. As part of the National Research Program the IRS conducts, the IRS uses this program to update return selection information and related examinations. We may select your returns when they involve issues or transactions with other taxpayers, such as businesses, business partners, or investors whose returns were selected for audit. Note, filing an amended return does not affect the selection process of the original return. However, amended returns also go through a screening process, and the amended return may be selected for audit. Additionally, a refund is not necessarily a trigger for an audit. That's true. You're going to be notified through the mail. Assistance is available. They can help you. They can try to help you. How the IRS will conduct the audit, so on and so forth. So I'm gonna get into this, right? I'm gonna get into this. 3 main things, right? 3 main things. Self-dealing, commingling, and under-reporting of income or over-reporting of income. Over-reporting would probably be something that you would never think about. Self-dealing, commingling, all of these things we learn to not do extensively in trustee training, but there are a lot of people administering trust believing that they're doing it correctly and will unfortunately find out the hard way that they are not. And, if you think that you may be in that group, you should email us, admin@welcometothefoundation.com. We are happy to answer your questions. And if you know that it's time, go to welcometothefoundation.com. Click on this key over here in the left pane. Go ahead, pick your training tier. Silver, gold, platinum. 1 week, gold. You're going to get the same deal as platinum for 1 week. So essentially, we're doing a deal. But IRS audits can be very, very, very intimidating. They can cause excessive amounts of anxiety. And knowing that you're doing what you're supposed to be doing as a trustee and doing what you're supposed to be doing as a trustee will take out 99% of the intimidation factor as well as the anxiety factor. And because I'm going to tell you, when I was going through that audit in 2016, I was not concerned. Because I knew that not only did I get the correct education, but I was correctly applying that education. So, as such, of course, we correctly apply correct information here at the foundation. So with that being said, let us know, email us. Otherwise, good luck. I'm not trying to say that I don't believe in you, because I do. I just may not necessarily believe in the information that you have. So that was the episode. Leave a comment if you feel so, if you feel so inclined. But that's it for me. I'm gonna check the time. Ooh, that's pretty good. Y'all enjoy yourself. Take care of yourself. Make sure you say 10 things that you're thankful for before you go to sleep tonight and every night. It is very important. And I'll catch y'all either tomorrow or Friday for current events, y'all. Peace, everyone.